Let's talk about a ticker that has been quietly setting social trading feeds and algorithmic screeners ablaze. Sadot Group, Inc., trading under the NASDAQ ticker SDOT. With the stock hovering around the $13.18 level following a blistering intraday spike that tested highs near $16.40 and wild historical swings, retail investors are scrambling to figure out if they are looking at the next micro-cap multi-bagger or a classic volatility trap. While mainstream financial media continues to lazily categorize this company through its legacy lens, smart money tracking and the modern retail trading crowd on platforms like Reddit, StockTwits, and Discord are hunting for the real structural narrative. They want to know why a former restaurant franchise group is suddenly commanding massive speculative volume, pivoting hard into agricultural commodity logistics, and integrating advanced technological frameworks. To understand what is really happening beneath the price action, we have to look past the superficial headlines and examine the physical bottlenecks of global food security, supply chain friction, and the relentless machinery of micro-cap momentum. Beneath the surface of those volatile daily trading volumes and erratic macro jitters lies a classic battleground between retail momentum and institutional positioning. When micro-cap stocks like SDOT experience sudden multi-digit percentage explosions fueled by news catalysts such as strategic technological acquisitions like Trade IQ and legal settlements, the typical retail playbook involves chasing the breakout on Robinhood or Webull, only to get violently shaken out by algorithmic stop-loss hunting. Institutional heavyheads and sophisticated market makers capitalize on this retail FOMO, accumulating shares during sharp liquidity vacuums, while casual traders panic sell at the lows. This creates a high beta echo chamber where technical support levels, such as the crucial $10 to $10.20 pivot zone, dictate whether a short covering squeeze can sustain its momentum or collapse back toward single digits. Before we break down how these liquidity cycles are shifting the stock's long-term trajectory, let us pause for a second. Are you currently holding a position in SDOT through this volatility, or are you waiting on the sidelines for a confirmed structural pullback? Drop your thoughts in the comments below. To truly understand Sadot Group, you have to throw out the outdated historical framing that still labels the company as a simple domestic restaurant operator. Long gone are the days when this enterprise was solely recognized as Muscle Maker Inc., slinging fast casual meals across a modest footprint. Over the past few years, management executed a radical operational pivot, transforming the core engine into a global agri-commodity supply chain and trading powerhouse. Today, the business operates across multiple distinct verticals: global sourcing and physical shipping of essential grains and feed products like soybean meal, wheat, and corn from high-production geographies in the Americas, Africa, and the Black Sea, to high-demand consumption markets across Southeast Asia, China, and the Middle East. Alongside this international commodity trading network, the company maintains agricultural operations producing grains and tree crops in southern Africa, while retaining a legacy footprint of over 50 food service locations. This operational metamorphosis shifts the company out of the crowded consumer discretionary sector and places it squarely at the intersection of critical global food security and high-stakes commodity logistics. Looking toward the future, Sadot Group's multi-year growth thesis hinges on its ability to scale high-volume agricultural trade while integrating advanced digital tools, data-driven logistics, and algorithmic analytics exemplified by tech-forward integrations and corporate developments aimed at optimizing operational efficiency. However, this high-octane model comes tethered to severe structural risks. Financial statements reveal a heavily stressed balance sheet with negative equity, working capital deficits, and volatile operating margins that leave little room for execution error. The company operates in a brutal macro environment where geopolitical instability in major shipping corridors, currency fluctuations, and fluctuating global grain prices can instantly flip trading profitability. For ambitious investors navigating the microcap landscape, SDOT represents a high-risk, event-driven vehicle where short-term price noise driven by speculative squeezes can easily mask underlying balance sheet realities. Looking past the immediate ticker tape oscillations requires weighing the massive global demand for food security against the stark financial discipline needed to turn high-volume commodity trading into sustainable long-term shareholder value. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.